Hey, Raymond, can you hear me today? Can you hear me today? Very good. This is an exceptional live stream because yesterday it didn't work. Hi Florian, hi Anne. Actually, I didn't really prepare a lot. Nee, heute höre ich nichts. Hahaha. Dann hörst du mich. All good. Very good. Loud and clear. Wonderful. Hi Toby Yogi. Hi Maurice King. Just joking. Actually, today I want to quickly go into the CoinField offering and the proposed stablecoin functionality enhancement on XRP ledger itself. Sali Manuel. Genau. Also, I have no financial interests, I have no sponsored links, and please no donations. Buy more XRP yourself. Today I wanna quickly go into the proposed stablecoin functionality from David Schwartz, because there seems to be still quite some confusion, even though I made quite a nice video about it. And I will also try to compare it to the new proposal from CoinField. So first, the proposed stablecoin functionality enhancement from David Schwartz. It's actually, basically you need to remember two things. If you wanna issue a stablecoin on XRP ledger, pending that functionality will be implemented, you will have to back that stablecoin with a certain amount of XRP. In the example from David Schwartz, it was 1.5 times the total value of the stablecoin you issue. In the video I made an example when I want to issue $10,000 worth of that stablecoin, then I would need to back that stablecoin 1.5 times. That means $15,000 worth of XRP. That will reduce the liquidity of XRP, the circulating supply, because that XRP will not really, but it'll be kind of parked, a little bit like in escrow. That will have actually Manuel made a quite interesting observation today, that once the XRP price is high, it may not reduce the circulating supply so much anymore, because you need to put as a backup, as a collateral, only a few XRP. That's correct, but on the other hand, we do not know in what, let's say, value or total amount those stablecoins will be issued. In my example, I think I calculated the current XRP price at 25 cents. I would need to to put as a collateral 60,000 XRP just for this $10,000 worth of my IPC stablecoin. Now, if XRP had a price of about $1, it'll be immediately just 15,000. If it had a price of, I don't know, $10, it'll be 1,500. So you see, the higher the price of XRP, the less XRP I need to put aside. And with that, Manuel was actually correct. However, I mean, we do not know how many of such stablecoins, like stablecoin A, B, C, D, E, will be issued, and how many of each. 10,000, 100,000, 10 million, 100 million. We have literally no idea. Okay? But because it needs to have this XRP as collateral, the circulating supply will go down. How much, we don't know. The lower the price of XRP, the higher the decrease of circulating supply, and that will basically increase the price of XRP automatically. So that's point number one. The collateral of these stablecoins on XRP ledger are XRP itself. Okay. Now, in order to be able, there is two problems with this, with the price of the, or two possible problems, let me phrase it like that. The price of the stablecoin and the price of XRP. We now know that you will have to put a certain amount of dollar value as a collateral for the stablecoin you issued. Now, if XRP price rises, you're way over collateralized, obviously. That's not a problem. On the other hand, XRP price dropping, let's say 50%, would basically mean that you would need to put 50% or 100% more collateral to come to the same level of collateral again. So that's one possible problem. However, the whole thing, like, once that full market is totally like vivid and many players are acting in that game, the idea would be that the price of XRP itself would remain quite stable. However, then there is the other possible problem, that the pegged price, because you will peg your price, you will have to peg your price of your stablecoin to something in the real world, to fiat, to precious metals, to any kind of stock, basically to anything where you can build a trustworthy price feed, where investors will trust the price feed. That's important. Let's assume you peg your stablecoin to a stock, and that stock rises 100%. That basically would mean the value and the worth of your stablecoin on XRP ledger would rise 100% too, which basically also means that you will have to re-collateralize in order to still have that required level. In the example of David Schwartz, 1.5 times of the total value of your stablecoin. Now there is two possibilities to mitigate those risks of the XRP price dropping. You basically go on a leveraged short position if you fear XRP is really dropping. Once it drops because of the leverage and because you're going short, you will actually receive enough money in order to be able to buy back more XRP to re-collateralize your position. The other thing, the risk of your pegged asset increasing in price drastically, you can actually do the opposite. You go into a leveraged long that could be CFD or an option on whatever you're pegging it to. And when the price really goes up, because it's a leveraged thing, you will be able to cash out and recollateralize your position with enough XRP. And that basically, those, I don't know, effects that will bring these leveraged shorts or leveraged longs and everything, and the liquidity on the XRP ledger for those stable coins into XRP and out of XRP is actually what the banks and the financial institutions are looking for, because that's instruments they know for years. That's how the traditional markets work as well. Now, one guy, I think it was Great Gatsby, if I remember properly, made an interesting example. He told me I could issue my iPinky coin, IPC, and peg it to gold. Okay? To the price of gold. If I could convince him as investor that I actually have that gold, basically by bringing him to my bank and opening the doors of my vault and showing him all the gold lying there, and he would be convinced that I actually have the asset I'm kind of selling on XRP ledger, he could lend me the collateral, the XRP collateral. So basically I would pay him some interest rate, okay? But I wouldn't need to put down the money of the collateral myself, because I have put the money already into my gold, okay? That's very interesting, that it will kind of open possibilities of people lending their XRP for other entities being able to have enough collateral for their stable coins they're issuing. That's quite an interesting feature, especially for like people who do not like so much risk, because lending, where you receive a constant interest rate on the money you lend, is basically a guaranteed income with basically low risk. And as long as you did verify that the asset actually is in my hand, the gold is in my vault, there is basically you can make a contract with me in that lending contract that if I don't pay the interest rates anymore, that you will basically receive a certain amount of that gold in order to kind of pay out the XRP collateral you gave me. That's very interesting. And okay, for both prices, the XRP price and the price of your packed whatever, precious metal, stock, fiat, it needs a price feed in order to be able to calculate this collateral. Because you have heard now that XRP price could drop, and XRP ledger itself, one XRP doesn't know its value, okay? It has basically no intrinsic knowledge about its value. It knows it can be transferred from A to B quite fast in 3 seconds or so, but it has no knowledge about its own value. And for that purpose we need a price feed which will let the XRP ledger know how much worth an XRP or how much value an XRP has, in order to be able to calculate those collaterals on the stable coins properly. That's one price feed which is important, and the other price feed is the actual price feed to the asset or whatever you're pegging it to. And that should be more or less a trusted source. A good example might be that you take the information from a Nasdaq site or something. Okay, now I will quickly go through if there is that, if Gio is asking if that is a positive thing for XRP. That surely is a positive thing. You have to understand one thing: banks don't like risk, and by being able to offer a stable coin, or a coin with, I mean, even if it's packed to a stock, I mean, stocks rise and drop, I don't know, maybe 1% per day, but not 20 or 30% as we have seen on crypto in the past. Banks usually like to be able to do calculations on quite steady measures. That's one of the reasons why they always hedge their risk. They basically lower their risk, and hedging is also quite popular in the XRP community. Some of you might have come across that term. Hedging basically means if you fear of something happening, let's assume you fear that some price is rising drastically, and this is bad for you, maybe because you're short on that position, then what you usually will do is you will do the opposite trade as well, or something which kind of goes into the opposite direction, okay, in order to mitigate the risk that you will lose money. Actually, futures is actually a quite good example about this hedging process. And futures are most popular on produce, like corn and beef and milk, all that kind of stuff which comes from the farmers. Why? Because usually the farmers are dependent on the climate. It could be a dry summer, it could be a wet summer, whatever. But Kellogg's, when they want to produce cornflakes on a regular level, and they want to be able to sell that all year long at the same price, they will need to know in December already at which price they will be able to buy corn or whatever they need for their Kellogg's cornflakes in March and in July. So what and the farmer, so basically they are interested that the price is stable, and the farmer as well, because the farmer has basically no idea how the weather will be like, if he will make a good harvest or a bad harvest. So he has also an interest in actually kind of predefining the price. And so what they actually do is they enter in a future contract, and the farmer, how's the term, confirms selling end of March and end of July so many tons of whatever produce Kellogg's requires to produce their cornflakes at a specified time, okay? Now, if the price of that whatever crop drops, that's good for the farmer, because he will still receive the price specified in the contract, okay? Even though the actual price on the market would be lower. That's bad for Kellogg's on the other hand. However, if the price goes up, Kellogg's is happy, because they still just need to pay the farmer the lower defined price half a year ago. Okay, that sounds a bit, I think you understand, but now you have basically one or the other party will lose. So where's the hedging of the risk? The hedging of the risk then comes actually in the way of the traders of those futures, because I as an investor can actually buy such a contract, And when this market is very liquid, and it is very liquid, it's one of the most liquid markets there is. Those future contracts are basically sold and bought and resold on almost an hourly basis. It's like crazy, that market. Then this risk for the average investor goes down, and obviously also the risk for the farmer and the company making the product with the produce he gets from the farmer. If you're interested in that, please, actually let me make a note, because I think I have quite a good link which explains that. Pages. And then I will put the link into the video actually explaining that. Put a link to the futures hedging into description. Okay, so it's from a liquidity perspective quite interesting. For banks and financial institutions, it's interesting because they will be able to deal on XRP ledger. I mean, a stablecoin will transact as fast and as cheap as XRP because it's on the XRP ledger itself with the same speed and cost. Okay, so that's something good because they can, as I mentioned, reduce their risk exposure to everything, and that's very crucial to large institutions. Now, the proposal or the offering from CoinField exchange is a little bit different. How it works on their system, I think, I'm not 100% sure, but I think it works like that someone wanting to offer an Apple stock token on XRP ledger will first need to buy this solo coin, and with the solo coin he can buy Apple stock on this brokerage gateway in this environment of this offering from CoinField. Then through a process that Apple stock will go kind of like in an escrow account where it cannot be touched anymore, and in the same time an IOU, I mean basically IOU, the abbreviation says it all. I owe you money or something, and XRP ledger has a functionality to issue IOUs. So what they will do, they will issue a coin on the XRP ledger. However, the collateral there is the actual asset behind it. And the effect here won't be as big as for the stablecoin on the XRP ledger itself, because there you need to have XRP as collateral itself. On this offering from CoinField, the collateral is the actual asset itself on their other systems somehow. However, if you want to buy an Apple tokenized stock, you will first need to buy XRP, and we do not know how many of these. I mean, they said that they could basically offer 30,000 stocks to be available like that, and do the math. If they offer, I don't know, 10,000 stocks of each of them. And I mean, the average, I don't know, is about between $50 and $100 somewhere in that region. Then this will create also quite a demand for XRP initially, for the people to actually buy those token assets, however you want to call it. Is that understood by everyone? Richie, XRP, Rich, is there enough XRP for all this stuff? Well, there is. XRP would just need to be freaking high in price. CSC Bain mentioned it already. All the money. Gustavo Ares, I just explained the difference. The stablecoin, I summarize it in 2-3 sentences. The stablecoins created on XRP ledger, pending that functionality will be introduced, will require an XRP as collateral, because that can actually be verified by the algorithms on the ledger that this collateral is there and that enough collateral is there. That's the genius idea behind that. That's freaking intelligent. Now the actual thing you're buying will only have its price pegged to an asset in the real world. In that respect, such a stablecoin on XRP ledger could be seen as a CFD, a contract for difference, because the price will rise and drop the same as the real asset, but you will not own the real asset. It could be that the person offering that stablecoin actually does have that asset, and that the person lending the XRP as collateral will kind of have his hand over that like real asset collateral, if you so wanna look at it. But in most cases that won't be the case. Okay. However, now the other mechanics, Gustavo, is a little bit different. In this CoinField offering, the actual collateral for the token, for whatever it's tokenizing, is the actual thing itself. And the difference is the trust. In the stablecoins on XRP ledger, you can be 100% sure there will always be enough collateral, because it will be enforced by a system, by an algorithm. On those other mechanics like CoinField offering, you have to trust CoinField that they actually did buy enough Apple stock or Google stock or gold or whatever they're offering as tokenized asset. And that's exactly the problem why Libra has been like opening the ears of all the governments around the world, because I think it was Mark Carney from the Bank of England. He had somewhere a quick video, I think 3 minutes or so, where he gave a rough overview about the risks of Libra, and the biggest risk is actually the collateral. How? I mean, the Libra coin should be backed by a basket of currencies, and how can you make sure that there is enough currency, fiat currency, in that basket to actually guarantee the backing. That's the same problem with Tether. A person buying Tether has to trust that the issuer of Tether actually has enough dollar put back somewhere, because there could be a moment for whatever reason that all Tether holders want to get out of Tether and want to get back their dollars, and if there isn't enough collateral, enough dollar behind the Tether, then the price of Tether will drop, and that's basically the not the stablecoin. That cannot happen, and that was the fear of most governments. What could be the problem, or one of the main problems with Libra? Toretit, no, Kava isn't that stable coin. Kava is actually another thing which is actually a stable coin backed by XRP, but off ledger. It's on their own, like the Kava coin is a known coin, and they back the value of their coin by XRP. That's kind of like a mixture between the CoinField offering and the functionality enhancement proposal from David Schwartz, because it's kind of neither know. That's a good question. Anyway, I mean, all three concepts will help the ecosystem, and that's the important thing to understand. And the potential to rise the price most is basically the stablecoin on XRP ledger, because there you need to put back the actual collateral. And then second, I would say, is the CoinField offering, because there each investor into such a tokenized asset will first need to buy XRP. And on the Kava offering stablecoin, I basically don't know the numbers. Tobiogi, well, basically they will create a front-end application together with Vice Wind for the decentralized exchange on XRP ledger. That will basically mean that you will be able to put an order on the decentralized exchange on XRP ledger. Let's say I want to buy IPC coin, or I want to sell XRP and I want to receive IPC. Whatever, that was a bit confusing. I want to buy IPC or I want to sell IPC. Let's make it simple. And it'll work. I mean, this DEX, the decentralized exchange on XRP ledger, works in the same way as a Binance, Bitstamp, Bittrex. Something I need to tell you guys, which is very interesting. A little bit off topic here, but when I'm talking about exchanges, I told in a previous live stream that I had open on Bitstamp and eToro X the same sell orders, limit sell orders at, I don't know, I think about 8 sell orders, each time 50 XRP at various price levels, 10, 20, 50, 100, 500, 750, 1000, and so on and so on. 8 of them, just to see which one would execute first. And today I realized that I actually do have a Bittrex account and that it actually works. I incidentally found the two-factor secure key in order to be able to set up the authenticator from Google so that I could log into my account, because that was the problem that they kind of couldn't solve. They weren't really helpful in it, but never mind. So basically I set up the same sell orders again on Bittrex. So now I have all these sell orders at the same price each time, 50 XRP on 3 different exchanges, and I'm hoping once the price rises I will be able to see which one executed first. That's the whole idea. But the interesting point about me making those sell orders was that I actually could prove that Bittrex cut their sell order book somewhere. I don't know. I think the last price you see on Bittrex sell order book is even below $1. And my first or my lowest limit sell order, I think, was $10. And you remember that about a year ago when that was more or less a year ago, in end of September 2018, when this Shane Ellis theory came along. I was checking the sell order book on Bittrex quite often, and in the beginning you could see those sell walls. One was about $400 million, about $600 million, just below $10,000, and one was about $400 million, just a bit short of $20,000. And over time they kind of had created so many low value sell orders that you couldn't see that those higher values would kind of be pushed out of the window, like my hand now is being pushed out of the window. But as soon as a few, let's say 5 or 10 orders were executed, they would kind of come back into the picture. So they were like constantly showing and not showing. I mean, showing and not showing in the order book at the end of the order book. And I realized that, and I talked about that. And then after about 2 months later, they kind of cut that, or created so many low value sell orders that even if 500 sell orders would be executed, that you would not be able to see those sell walls anymore. I mean, make of it whatever you want. But coming back to the stablecoins, did now everyone basically understand what these stablecoins are about? Can you still hear me? It's so quiet. Is my wife there? Didn't see her. Can you still hear me? Absolutely. I still believe in Shane Ellis' theory, more than ever after I figured today that my higher value sell orders aren't visible on the sell order books, which basically proves that for some reason they did do that, and they didn't do that just so that you cannot see high value sell orders. I mean, why would they? I mean, in a normal circumstance, when anything is at $1, the probability that you will be able to sell that something in the not too distant future, let's say in the next 12 months, for $500 or $5,000 is close to zero. Why hide such sell order? It's just stupid. It just makes sense then if you can see the mass it creates, the 600 million buy wall and the $400 million buy wall. And the interesting thing is the 600 million were 3 sell orders, each around 200 million. Roughly less than $10 away from it. I think one was at 9,994, 96 and 98 or something. Like very close to each other, so that there would be some space in between to maneuver, but not really much. And the 2 sell orders just below 20,000 were, I think, also on 19,960 and 64 or something. I mean, it could still be that it was kind of like someone trying to play stupid with us, but no, I still believe in chain. I mean, for me, it's literally the only way. I mean, if Galgitron's theory with the jumping monkey was right, that the price would rise slowly, then we should. I mean, I recall you guys a year ago during swell 2018, XRP price was just below 60 cents, and now we're not even half of it. English to me, I don't know what other stuff they have up their sleeve. But one thing, and this is what I basically learned about this whole stablecoin thinking, what it actually, I mean, there is the technical part, how it works with the collateral and stuff, you have these different propositions, the CoinField, the Kava, and the stablecoin on XRP ledger. They all work a little bit different, so they have different risks in different areas, but that's okay. But the thing which was like most enlightening for me was the actual purpose of it. And Miguel Villas stated it in that video I have referenced in the past many times. He stated, the day XRP will be listed on a foreign exchange site where they list foreign exchange prices, that's the day when XRP is super fluid liquid. And for that to happen, we need an ecosystem around the whole thing. It cannot just be cross-border transactions. There must be, for those financial institutions, there must be other products so that they're basically willing to invest into XRP. I mean, cross-border is fine. Don't get me wrong. That's I still stick with my 4-digit prognosis as soon as we start seeing high value transactions on the XRP ledger. Everything above, I don't know, 50 million or so will require, or up to 50 million transactions, I guess, would require 3 digits, and everything above will require 4 digits in order to be able to provide enough liquidity. But to make that system kind of like stable as a rock, it'll need other stuff as well, and all these other things going on, like micropayments, like being able to use XRP on a kind of a debit card and go to Starbucks and pay your coffee with XRP. That's all nice. We will mostly never do it. Maybe, I don't know. That's to be seen. How those cold wallet offerings will work in the future. Maybe there is coming a company which offers a really nice solution to it. Something like, I don't know, Apple Pay, which you can have on your mobile. I don't know. And all those things help make that XRP market liquid. One might have a bit more impact than the other, but everything together will kind of like create like this distributed ledger, financial, whatever you want to call it, system. I mean, you have to realize this basically was the background of my enlightenment, that this is important for the long-term stability of the whole thing, that banks, they're risk averse, they don't like risk. Surely they want to have a 15, 30%, 50% return on something. But if the risk is at 90% that they lose everything, they won't invest. They won't. And that's the reason why they need other financial products to leverage or mitigate or hedge that risk. CKJ Cellmate. I made a video about Stablecoin. Check that video, and I think I explained it with Joe average words to understand. Exactly, Matsumura Fishworks. Lending directly via the ledger. Nazario Parisi. Yes, I honestly believe so. Nazario is asking if I'm still believing if dozens of banks will go live with HODL. Yes, I do believe so. I believe even last year the system was ready. What the holdup is, I really don't know. I told it basically in almost every stream I was asked about that. I don't know what the holdup is, because obviously regulations for the purpose of RippleNet being a new payment rail, the plumbing, as Brad Garlinghouse usually says, is fine enough, because the KYC and the AML checks are done on the banking side. Ripple is just the plumbing underneath. So I'm still 100% convinced we're not waiting for regulation. What could be, this I really don't know, but that if we're looking at this bigger picture with this superfluid liquid XRP market with stable coins in different varieties, like stable coins on ledger, off ledger, various varieties, etc. If that's an actual requirement from the banks in order for them to be sure that the price of XRP is stable, that could be, but I honestly, I don't believe that this is the problem for the holdup. But if that were their concern, then we would sure wait at least 1.5 years more. If that'll be the case, that we have been waiting already 12 months more than most of us have been expecting. Because the CoinField offering will just go live in about a year from now, in 12 months from now, Q4 2020. And the proposed stablecoin functionality from David Schwartz, I mean, first they have to agree that they want it. The validators have to agree. And then they have to develop it, and that's also not so simple. I wouldn't expect that to happen in the next 18 months. And then the whole thing only will be able to start, like creating this super fluid market. But I guarantee you there will be banks who will be willing to take the risk of high volatility. And I mean, I said it over and over. Once they can bring the price up according to whatever theory, be it Jane Ellis or maybe they have something other up their sleeves, then they will do that. I mean, this Jane Ellis theory, many people don't believe it, and mostly Galgitron counters it with downward pressure due to people wanting to sell. But the upward pressure on the price will be so drastically higher because there will be flowing so much money through the system that the downward pressure will be kind of nothing. I mean, on a good day, we have, I don't know, about $2 billion XRP traded. That's a good day. In terms of the old Swift, that's 0.1% of the daily volume. That's nothing. And I'm pretty sure that 5 to 10% volume of not of the Swift KPI system, because there they report really weird figures which do not correlate at all to the conventional Swift system. Like they say 80% of the transactions make, I don't know, what was it? 800 billion? No, 80 billion, I think. Or 8 billion even. It was like a ridiculous low number. I tweeted today about that. Why those GPI figures are so low. Either the really high value payments are not going through the system, or they lost already so much market to RippleNet. I mean, Brad Garlinghouse recently, that's actually quite an interesting thing, and I will quickly explain it. I hope everyone knows what a KPI is. A KPI is a key performance indicator, and usually everywhere where your success is measured, there is a KPI. In sports, it's usually the score you make. You win, you lose. You win by how many goals or whatever points difference than your enemy. In tennis, it could be how many matches you win in 2 or 3 sets as opposed to 3, 4 or 5 sets in a Grand Slam tournament. As a CEO of a company, one KPI is the stock price, another maybe the dividends you can pay out, stuff like that. It's like numbers where you can kind of compare previous results, so that people kind of get a feeling, because we always need I cannot tell you Michael Lewis ran this time a little bit more, his face was a little bit more purple. Usually it was a bit more dark red. That won't tell you anything if he ran faster or slower, and if he won the gold medal in the 100-meter race. That will not help you. It will help you if I tell you he won the race at 9.82 seconds or something. We always do the numbers. So basically, coming back to what Brett Garlinghouse was talking about, he talked about the KPIs Ripple used. Initially, they used signed contracts as KPIs, and eventually they realized signed contracts doesn't help, because we need to know how many contracts are implemented, because that basically means volume on XRP, on RippleNet. And after a while they figured, no, also implementations is not enough, because it could be that a bank has implemented RippleNet, but only 1% of its volume goes through RippleNet. And then they changed their KPI to measure the success of themselves, of Ripple, in transactions, in amount of transactions. And to that guy, I don't remember if it was, I think it was Pompliano, in the interview with Pompliano, he explained that. And he admitted that they're coming close to the 1 million transactions. And I think maybe in the last German live stream we have been debating about that, about the time factor of that 1 million. I mean, each and every other company, be it Swift, be it Target 2, whatever, they usually say how many transactions per day. And they're in the million area somewhere. At Target 2, I think, has 1.5 million transactions in average every day. And I mean, he didn't go into detail. I mean, Pompliano kind of was playing stupid. He asked 1 million transactions per quarter, per month, per week, and I thought by myself, are you stupid? Per day, it's for sure per day. And in the German live stream, we everyone confirmed to me that it can only be per day. That might actually explain why the GPI, why 80% GPI volume is so low, because maybe so many banks are already using RippleNet. That could also explain why Gottfried Leibrand left Swift, because he saw, I mean, why should I continue here when I basically see, I mean, imagine that from 5 trillion to, actually I don't remember the figure, but it was way, like 10% or so from that. I think it was 80 billion they mentioned. Can someone confirm that figure? That I think it was Ray Markers or something from Swift. I think he said, give me a moment, I will check my tweets today, because that may be faster. Profile, tweets. 80% they say is about 100 billion. I mean, come on. Every one of you here in the live stream, I'm 100% sure, believes Swift has a daily volume of 5 trillion. I've been living with that figure for about 1.5 years. And now we hear 80% is like 100 billion. That's 0.2%. What's that? I mean, come on, give me a break. And he told that, like, those, at the time when he told that 280 banks, like, which produce like 80% of the transaction, of the traffic, were on GPI, that it was them. I mean, I I can hardly believe that. I mean, this figure is so weird. That's another thing which leads me to the fact, believing that we will see Nazario Parisi, that was quite a long answer to your question, that we will see dozens of banks using HODL once they can get over whatever is holding them up. And dozens, I mean, how many are dozens? That's another thing. I mean, 12 it isn't. Otherwise, sorry, he said a dozen. Is it 24? I don't think so. He would have told 2 dozens. Is it 36? I don't think so. He might have said 3 dozens. I'm expecting somewhere around 50 banks minimum going live this year, minimum. And this tweet from Finastra, and Finastra has about 9,000 financial institution customers worldwide, and from the top 100 banks, 90 of them are Finastra customers. However, not each of those 90 or 9,000 are using Finastra's payment software for payments. Could be that they use other software from other vendors for their payments. But even if it's just 10%, that's way more than enough to have this 5 to 10% of Swift volume. Easy. Toretit, that may be that it actually, maybe that could be that the regulation, that we are not really waiting for the regulation in order to use XRP, but that could actually quite a good approach toward it, that we are waiting for XRP to go high in price. We wait for regulation. That could very well be. This I would sign immediately. But that we are waiting for XRP to be used, I will burn my hand before I sign whatever paper what that's written on. CTS, 3 banks testing Ripple. One of them is a central bank, Bank of England. Liquidity crisis, I don't think, I mean, if they're clever, those banks, then they will start using HODL in order to prevent the liquidity crisis, because that's 100% what will help. Getting those values in the Nostro accounts back into the countries. But that's also not something which will be done in 2 weeks, because I have learned that many of those Nostros are actually, I don't know how it's called, obligations, or kind of like a credit or a loan on the other bank. And somehow you need to be able to close down that contract and to pay back, I don't know, somehow that money, or this will also take some time. I really don't know. I don't know what's hold up. I just know theoretically the system is ready, and I'm pretty sure that, and come on, at Cybos not one person was talking about Ripple, and basically in their head everyone was thinking about Ripple. I don't know, Brandon, I don't think that Ripple will ever announce which banks are using HODL or not. I mean, that's a USP, a unique selling point, or a key, how is it called, this other term, a key differentiating factor. Like, if you have a competitor and you want to arrive in at the finish line first, you need to be better in something. And by using HODL, you have that competitive advantage over your competitor, and thus they will not let us know, and basically we will never be able to know which bank. What they may tell is bank so and so is on RippleNet. That may happen, but if they're actually using HODL or not, we will never know, and there will be no way you will be able to analyze the XRP ledger in order to be able to figure that out. Because banks, as long as they don't hold XRP themselves, it goes through XHODL, previously called XRP, and as long as they do it via multi-hop, you will have no idea whom initiated that payment. The transactions on ledger will always be just those XRapid instances, like Bitrex or Bitso or Catalyst, Corporate Credit Union or whatever. Interesting thing is also about Swell that they did invite some members of the community. And it's also interesting what types of people, like Mr. B and the Panda, I'd call them rather diplomatic. I don't remember any one of them attacking any other person on Twitter like me. When someone is an idiot, I let him know that he's an idiot. I mean, first I give him the chance. Usually, today not. Today I was so pissed about the guy referring to market cap idiocy. I called him basically an idiot right away. But in 95% of the cases, I usually try to let a person know, here, go educate yourself. And if you still think it's the way you want to tell me, then you're an idiot. You know, today I was talking, really, the chat was still 100 people watching. I was talking quite a lot, so basically little discussions going on, but I really hope that you could learn something and that I did answer the most important questions. I mean, the summary of all these things: the Kava stablecoin backed by XRP, the proposed stablecoin functionality enhancement on the XRP ledger, which that's basically my favorite. Even though you do not buy the asset, you just buy kind of like a CFD, a contract for difference. But who cares? I mean, little people buy Apple stock because they want to go to the meeting where they can vote. Yes, no. Usually they want to just participate in the price movement, like 90% of the investors. And those who don't, they will anyway not be interested in tokenized assets. They will buy the asset directly anyway. And also the the CoinField, and all these together will bring in about hopefully 2 years time a market for XRP, how Miguel Villas is imagining it, that the price of XRP is actually listed on a foreign exchange, kind of exchange, like dollar or euro or whatever, and that would mean that XRP is freaking super liquid, and anyone, whatever amount he needs, he can get in and out of XRP, and that's the ultimate thing. And I think 4 digits won't suffice to have there, to have such a market. That I'm pretty sure. I don't say that we will see 6 digits. That I don't know. That'll be pretty high. But 5 digits, that's definitely. And I mean, between 10,000 and 100,000, there's quite a lot of space in between. And with that, I want to thank you for your patience, for your trust, for your persistence sticking with me. I'm looking forward to questions. Put them on any of my videos actually. Mostly I receive a notification. If I don't react within a day, then try it on a more recent video or on another channel. Some figured out my email, but I won't tell it. Figure it out yourself or let it be. Some are in a Telegram channel, but I don't want to promote that too much as well, because I don't want to have each and every news discussed. It's rather a quiet channel where we discuss certain topics which are still unclear, but you basically can always ask such questions in the live stream as well. And you can always contact me on Twitter, ipinky77. And yeah, looking forward to hearing and seeing you again. I think my wife didn't show up. Maybe she didn't realize I was live. Normally she shows up. Never mind. Yeah, that's it for today. Have a nice rest of the week. Some of the German-speaking followers I most likely will see tomorrow, or hear or read tomorrow again. And stay tuned. And I mean, we still have more than 2 months to go, and as you know, there was one guy asking me if I still believe in Jane Ellis. If the right 15 or 30 minutes will happen, we can easily come to high 3 digits, like $700, $800, and from there to 4 digits, it's not far anymore. Okay, so don't lose your faith and always know in what you invested. The one and only opportunity in your lifetime to gain financial freedom. Take care.